Hello and welcome to What's Next Wall Street. I am Georgia Alfredas.
And I'm Dave Mathews, and this is a show about stocks, crypto, and the new decentralized financial Web3 world around us.
I've got details on all the hot new trending products that everybody's talking about, using, and investing in.
And I'm going to talk about dropping an anchor, and that's not on my boat, but I love doing that. This is a new platform for decentralized finance applications.
Sweet. We've got Greg Krause, lead instructor at OptionsPlayers.com, as our expert. Greg charts a lot of these companies, and those chart indicators can show where a particular stock is headed so that it's easier for you to target investment potential. So Greg combines technical analysis with fundamental knowledge.
Now, all of this is our goal to provide you with education, information, and tips to help you become a more informed trader with a tailored trade plan so that you can stay up to speed with what's next on Wall Street and keep stacking some gains.
Yeah, so listen, you can email us at OptionsPlayers.com, hit us up on social media at What's Next Wall Street with your questions. Listen, we can also direct you to instructors over at OptionsPlayers.com. They're experts. They dig into all those trading fundamentals.
Now, you can watch this episode on the OptionsPlayers.com YouTube channel or listen to the podcast on Apple, Spotify, or wherever you get your podcasts.
So whether you're listening to the podcast or watching it on YouTube, make sure you subscribe and do hit that alert button so that you always know what's next on Wall Street. Make sure you share the show, and if you like us, give us 5 stars.
Or at least a thumbs up.
Yeah, something.
So Amazon, the global online retailer, is increasingly receiving criticism of an antitrust bill aimed at limiting its power. Now, part of the plan is trying to distance Amazon from other tech giants the bill targets. In a blog post, Amazon Public Safety Vice President Brian Huseman said the company's consumer business that the bill targets is more like big retailers Walmart, Target, and Costco than the businesses of Apple, Facebook, or Google. The bill is sponsored by Iowa Republican Senator Chuck Grassley and Minnesota Democratic Senator Amy Kuklabar. Did I say that right?
No, it's Klobuchar.
Oh.
Klobuchar.
Oh, the
Amy
C silent.
Klobuchar.
Oh, good. Yeah. So this would limit giant tech firms for giving preferential treatment to their own products, like Amazon Essentials.
Yeah, but I can't. Okay, but here's the thing. If I got a company and I'm selling my stuff on my wares on my site with your wares, I want my wares to sell out. So maybe I don't get the big picture here, Greg, but why isn't it fair for a company to give preferential treatment to their own products? What am I missing here?
Trying to get votes. You know, I'm about to beat up the government here, right?
Gosh.
So let's really talk about, there's 3 major antitrust laws in America, the Federal Trade Act, the Sherman one. All right, so really, we're looking at the Federal Trade Act, maybe the Sherman antitrust law. It's supposed to protect the consumer, not the business in the United States law. Now, if you go to Europe and things like that, it's actually to protect, a lot of it's to protect businesses.
Because a lot of them are state-run businesses.
Yeah, so what are we really looking at when we say protect the consumer? We want quality product for the cheapest possible price.
That's right.
Statistically looking back, Walmart basically destroying every other retailer did what? Offered us lower prices, didn't they? What does Amazon do? It gives us the lowest prices. So why is it that at Amazon Basics, I guess that's what we're really talking about in sense.
Which is their plain label, just like every grocery store.
Every grocery store had Target has it. Everybody's got it.
Walmart's got like a million different ones. Great Value. Their computer ones like Own or whatever with 2 N's or whatever.
Own.
All right. So how is that hurting the consumers? What I look at as a consumer or from a lawyer standpoint. Now, are they going to win? No, they're going to lose in public opinion because companies are bad. But just understand that Amazon is offering you the cheapest possible thing. And by telling them not to do that, you're going to get a more expensive product. You kind of get what I'm saying?
Yeah, but this is like with Walmart, it was at the expense of closing up all the small shops that used to be around the nation.
We don't have Toys R Us. We don't have,
So that is helping. That might have been bad for the economy. That might have been bad for the other companies. But it wasn't bad for the consumer. And antitrust is supposed to protect the consumers from price fixing and everything else, not from other companies go out of business. You want to know whose fault it is if a company goes out of business?
It's the company's fault.
The company's fault.
Their
It's
money.
not because Jeff was smarter than you. You know, I'm sorry. You know,
Which
Listen,
he is smarter than you.
he might not be smarter. He's harder working, or,
That's right.
or he's hired the right people.
I'm going to tell you something. There's something to be said about going to Amazon, getting everything I need from groceries to, it's like my online Target. So, I mean, what?
But this maybe is why Jeff left the company too. There's some speculation that he was going to go into outer space, and they weren't sure that there was like an insurance issue with him being chairman.
I just think it's gotten way beyond him, and he understands that. And you know, how much money do you really need? And, you know,
exactly.
If you're that rich, at least you want to, you know, especially after his divorce.
Yeah, live a little.
Spotlights are on him.
Yeah,
just get out of the public eye.
Yeah, and live your life.
You know, he's not Elon out there tweeting left and right like crazy, although he has tweeted some stuff about lately. But yeah, I'm antitrust. I'm going to leave that up to the lawyers and things, but I look at it as what's best for the consumer. And if Amazon puts it there, that's one thing. We used to have this talk about Microsoft, you know, like, oh, you put Microsoft's software on there only, or you know, Apple things. Okay, it's on there. What do you want them to do? Like, this is our product. Would you like to buy this more expensive product instead? Like, is that the warning you want to put on there or something, you know? I don't know.
Look about the warning that happened with cookies. Now, every stupid website in America has a button that you have to click that says, I approve cookies. And of course, there's cookies everywhere.
Yeah,
like,
you have no choice. You're not going to get to go to the website if you don't approve of the cookies.
But here's what I'm worried about, though, around Amazon. We're using it to buy mundane things. Like I use it for batteries because like those little coin cells that you put in car remotes, they're like $12 for that battery if you go to a store.
What you do?
But
you get it
for like $3 on Amazon.
And now batteries is a little bit different because they are made by different manufacturers. But most of these places are made by the same manufacturer, and a different name is stuck on it.
That's right.
I mean, lawnmowers ain't a good
you're
not a good thing to look at from Amazon selling, but half the lawnmowers are made at the same exact plant with a different name on it.
Yeah.
It's the same lawnmower, but you're just paid more because it's got a certain name on it.
Yeah. But here's what I'm worried about. So say Jeff closes out all the little mom and pop stores because Amazon makes it so easy. So now you just have Target, Walmart, and Amazon. And then Amazon starts raising those prices and raising them slowly over time. Then what do you do? Where do you go? Exactly. So,
I get it.
But there is something to be said about discovery in the physical world of a product. And this term showrooming, when you use discovery of something when you go in a store, they showroom it, but you don't buy it at that store and you walk out and you buy it online. You know, Jeff could raise the prices of the stuff that you buy at retail. So maybe that would kill showrooming. So you go into the Target and it's actually the same prices on Amazon, which I'm seeing on some of the things I search for. You know, one of the projects that George and I were involved in was this little barcode scanner where you could swipe a barcode on any product and it would take you the relevant website on the internet. I forgot what that thing was called.
Something like, can I say it? Are we going to get sued if I say QCat?
Oh, the QCat. That's right. I forgot. So the QCat, you know, it's built into the Amazon app these days. You just open the search bar, you click the barcode button that's in there, and you can take a picture of a barcode and find out more information. Now, I do this at retail stores all the time because I want to read the reviews on it.
I do too.
I want to see if this thing holds up well, if it's hard to program. And there's nothing worse these days than buying an Internet of Thing device and then after 2 years, the back-end server goes down, so you can't turn on that light bulb over the web anymore because it's end of life. So anyway, that's why this whole idea of Amazon getting too much power could be creepy.
Right. Well, Treasury Secretary Janet Yellen is flipping the script. She says she was wrong last year about the risk of inflation. Inflation is at a 40-year high in the U.S. However, y'all might remember last March, Yellen said rising inflation posed only a really tiny, small risk. Yellen blamed high prices on unanticipated and large shocks to the economy and supply bottlenecks. I mean, there was a supply bottleneck that she didn't fully understand at the time. I mean, there was a bottleneck.
The supply chain wasn't there, but when you give away money to free to people, of course there's going to be inflation.
I want some of this freaking money you keep talking about, damn it.
PhD, and I don't teach at an Ivy League school. I might have went to one. But look, I knew there was going to be inflation. Everybody with a common sense education or any background in economics knew it. But Yellen, I think in the show we yelled about it.
What the hell are you yelling?
How did you not know? There's been supply issues. I mean, it's the basic demand curve that's causing, you know, you can look at it. What did you think was going to happen? The government's giving out free money. There's supply issues. Everything's throwing that demand curve as far to the right as possible. You didn't think there was going to be inflation? The government says inflation last year was 7%. That's BS. We know it's higher. I mean, we can just look around. And then this year it's expected to be 8.3. It's higher than that. I mean, it's just, I have no idea what she's thinking. I mean,
but if
like,
you
how
say,
does she teach?
If
That's
the
how I look
government
at it.
says there's going to be inflation, then we're going to stop shopping, and we need to shop to keep the economy going. So, I mean, what are we going to do?
Yeah, well, it's the American way of overconsumption.
Yes.
We consume everything. You know, you can go to a store and order a dinner or a lunch, and it's 5 pounds of food.
That's
you go
right.
to Europe, and they give you like a spoonful of protein and some salad.
Which is all we
Exactly.
need.
Yeah.
And meanwhile, speaking of swelling, home prices are still soaring despite rising mortgage rates. The S&P CoreLogic Case-Shiller Index for March shows a 20.6% annual jump in home prices. That tops the 20% gain the month before.
Wow.
Now, Tampa, Phoenix, and Miami, Georgia's favorite,
Yes.
posted the biggest gains, with Tampa prices surging nearly 35%. Industry experts say demand remains high even as mortgage rates become more expensive. Are they double now?
They're definitely double.
From a year ago, yeah.
I really wish I'd bought a house in Phoenix when I lived there. God dang it. Home prices are surging. Prices at the pump are surging. But if you live in New York State, you are starting to see some relief. Okay, for my in-laws in upstate New York, the suspension of some of the state's gas taxes, which was passed in April as part of the state budget, has begun. And well, it's going to last through the end of the year. So it's expected to save drivers 16 cents per gallon. I mean, that's something, totaling more than $600 million in savings throughout the Empire State. So,
And as if those states, or that state, did not have enough potholes already. So, great. Today's pro tip is brought to you by OptionsPlayers.com. Now, the volume price trend indicator is used to determine the balance between a security's demand and supply, and is very useful.
Okay.
Now, the percentage change in share price trend shows the relative supply or demand of a particular security, while volume indicates the force or movement behind the trend. Now, on days when the stock price goes up, just multiply the volume by the percentage price, that increase between today's close and the previous day's close, and then add the result to the previous day's PVT value. You can use these values to compare moves, which will help you understand action better.
Really?
And I hope this
that was like
helps
Algebra 2.
you stack.
All right, so this is the part of the show where we get to hear from you. You can always hit us up on social media at What's Next Wall Street. You can, of course, comment on our YouTube page or email us. Email us at www.optionsplayers.com. So this first email comes from Mike O'Brien, who writes, can you explain the difference between using UVXY as a hedge versus something like SPY puts or even VIX puts or VIX puts? Greg, what do you think about that?
Well,
Greg was over here like this.
hey man,
Playing bingo.
The market is open right now. So, what exactly are we talking
What's
about
the
here?
question? Wow. Wow. Okay. They want to know if you can explain the difference between using UVXY as a hedge versus something like SPY puts or even VIX puts.
All right. I mean, all of them are going to correlate together, so I don't think there's a huge thing. Now, there are some like tax purposes you can look at. Some of those are going to be like 1256 contracts, which if you're holding for a short period of time, you only pay 40% short term, 60% long term, things like that. So on like if you're playing SPY puts or something like that, you might have to pay all capital gains tax, while some of these other ones they're cash to market, mark to market, so you can get a little bit of tax advantages. And that really comes. My saying is it's hard to beat the market, right? It's much easier to beat the tax man. And that doesn't mean you're cheating on your taxes. It's how you actually invest, right? So if I can make SPY and SPX are the same things, although I consider SPY a broad index and a 1256 contract if I use options, it's a gray area for the IRS. So talk to your broker. Your broker has to say it's a 1256 contract and then they'll count it. But if I enter a 1256 instead of a regular one, I'm saving a lot of money. So you're talking about, say, if you make $500,000, the difference could be paying 40% tax on that money or 20%.
Okay.
Right? So That's a huge difference. So you want to pay 20%, right?
Of course.
So
And that's still short-term capital gains. You're only paying 20%?
so 1256 contracts are marked at the end of the year. So if I purchase something, I hold it for longer than a year. It's a 1256 contract. At the end of the year, I pay taxes on whatever I've gained, realized or non-realized. You kind of, so it's cash to market,
Okay.
or mark to market.
Interesting. All right. So this next email comes from Nathan K., who asks, will gold rally if the Fed cuts back on the interest rate or increases the relationship in between? What do you think, Greg?
Gold's gone up pretty a lot in the 5 years. Really, it's been going up. I'm not going to say it's going to go up. We've kind of seen a massive inflation, but we haven't seen gold go up during it because it kind of went up before. Maybe whoever was purchasing that gold knew something we didn't know. But then you also, it comes back to the crypto market and everything else. There's so many other things that people think are safe for inflation. Now, I'm not like a crypto fanboy or anything like that. I think it has its place in it. But yeah, gold's only going to go up as it's a limited supply. And with inflation, it's a good. Just understand that there's multiple ways you can invest in gold. You can invest in physical gold, and you can hold that gold, or, you know, and you can get it delivered to you, or you can just buy something that's just based upon it. Look at gold miners also if you think it's going to go up, because it's a way to get leverage on gold price, or the gold spot price.
And these are the miners, the people actually digging holes in the ground.
Yeah, it's, you can buy EFTs on that, so it's a bunch of miners together. And the reason why is, say it costs a miner an average of $900 to get 1 ounce. Let's just say that's the cost with fuel and everything, $900. Well, if the gold price goes from 1,800, right? They only made $900 there, but it goes up just to 1,900. Now they're making a whole nother $100 in that. It's a lot higher percentage, right? So it's basically, hey, if it goes up 1,000, that's not 100% for gold, but it's over 100% more profit for those miners. So it kind of leverages it out there.
Hey, Georgia, you know what else goes up in value during inflation?
What?
Old Porsches. By the way, 1973 911 was
Love
the car
that.
at the end of Top Gun.
Yes.
If you saw it, it was a Model S. I've got a 73 Targa with the S option package on it. So it's for sale. So hit me up.
What? No, it's not for sale. You have to keep that. You don't
Okay.
ever sell it.
But hey, it's inflation. I need to
No,
liquidate
you
some
don't
cash
sell
and buy
it.
some crypto.
Is that the white, sweet white one?
That's the baby blue one.
Oh,
Yeah.
I'm so jelly.
Blue-eyed devil.
So listen, that's you. If you've got a question, we can probably answer it, and Greg, or find someone else who can. So hit us up on social media at What's Next Wall Street in the comments section, or on our YouTube page, or both. You can email us as well at www.optionsplayers.com with your questions. You better not sell that car.
Hey, so this week we've got a special guest, an old friend of mine from when we both lived in San Francisco back in the day. It's Greg Gopman talking about his latest engine for creativity on the blockchain with their infrastructure company, Ankr. Greg, what's going on?
Hey, Dave, great to be here. It's a wonderful time to be in Web3.
Yeah, you got into it how many years ago?
I got in 2017. I was in virtual reality before, and virtual reality didn't really have the liquidity or the financing that Web3 was getting. And so I kind of dipped my toes in and started my first company back then in 2017. And then I'd say really went all in in 2020.
All right, so now in the years of 2020, it's when we were thick in it with COVID, and it seemed like a lot of this NFT world and coins were being minted left and right. What were you looking at then in those early 2020s?
In the beginning, we were looking at DeFi. So most of us had like in 2019, I kind of sputtered out of the industry a little bit. It was a really cold bear market, and it was very hard to find ways to make money, or like projects to work on or projects to work for. It was everyone was kind of lost. And so a lot of us kind of left the industry a little bit. In 2020, DeFi has started coming back around. So you had these really weird farming projects. So Compound started, which was great, but like it was very hard to understand how that integrated with like new projects. But then you had these like weird farming projects like Yam or Spaghetti or Pickle or all these like Basis.cash, all these like random things like .cash and .money. There's one called Base.money, which is really cool. And it was basically this totally new vertical within Web3 where people were launching new tokens around yield farming. And so that just started really like to take off a new market, involved using MetaMask and using Uniswap, which most people had never used before. So learning how to use Uniswap, making liquidity pools, and it kind of started this new growth that we see in today, even before the NFT boom. There was this like early DeFi summer boom of 2020.
Yeah, and we talk about this being the Wild West for investors, right? You've got all these, what I would call crap coins. And of all the brands you mentioned, really MetaMask is the only one that succeeded.
Yeah. There's, I would argue that Compound and MakerDAO have really laid the foundation, like Compound, MakerDAO, and Aave, for what is DeFi and all these other things that get built around it. This other thing came around then called YFI, which was like also doing really innovative stuff for yield farming strategies or yield strategies. And this guy Andre kind of like came around, who's the Wi-Fi guy, and then he moved to Phantom, and then the Phantom ecosystem blew up. So there's all these trends like when you're in it, but there's also a lot of shit coins around the good stuff too. For every like good project, there's like 20 shitcoin projects, and there's like 50 more like completely like scam projects, and so like 100 scam projects. So you really just gotta like know how to navigate the field a little bit.
And I think what you said there a minute ago when you're talking about Andre, if you find the leaders in a field, if you follow them and see which groups they collaborate with, that's really the only way you can find a project that's legitimate, right?
Pretty much. That's a good way. You could also look at metrics. So a lot of people follow like DeFi Llama and some of these like hubs for getting like metrics on how things are performing on the blockchain. But to be honest, like even metrics can be manipulated like in the space. Like you could buy ads and growth figures and like users for a lot of stuff, wallet addresses. But at some level, like, the metrics are real, and like there is a good alpha to be gained there from like Nansen and DeFi Llama and some of these better analytics sites.
Yeah, and Twitch kind of makes fun of this when they call the hype train, right? So if they are faking their growth numbers, you too can get sucked into that growth train as well with some of these DeFi things. But you've been working on a new thing that's a Web3 infrastructure company, and that's called Ankr. Tell us about what Ankr's doing.
Yeah, so I didn't start Ankr. Ankr's been around since 2017, but Ankr really started blowing up around 2020. Ankr is it's an infrastructure company in Web3. And so we like to say that Ankr helps blockchains run their blockchains. We help blockchain companies run their blockchains. We help people access blockchain data faster, whether they're users or developers trying to access the data so they can like make their own dApps or use blockchain dApps on it. And so what Ankr does at its core is we have kind of a node delivery network, like a global node delivery network, so that all these blockchains, we can store blockchain data on servers around the world, and then people can access them faster and more reliably than blockchain can do on their own. It's basically what DevOps looks like in Web3. And it looks a little bit different than how we're used to seeing things in Web 2, where in Web 2, you need to store all these things on your servers.
Like I'd have an AWS instance, and I might have like a Heroku instance. Explain it with kind of analogies like that, maybe.
Yeah. So typically you would have all these instances, and that's where you would be like storing your Web 2 application and making updates for it. People will be interacting with that. But in a Web3 world, most of this stuff happens on chain, on the blockchain. And so the things that people are using to access your what's in your wallet and what's happening on that chain and how your wallet's interacting with that chain, that's all on-chain data. So that's all that's the node of the blockchain, right? So there are full nodes, which is the last 20 transactions. There's the entire node, which is like all transactions, called an archive node. Most things don't use the archive node, but with all of its historical data, most of it's just full nodes. So it's like this like chunk of node, and where that node is located so that people can access it really fastly and pull the data. And when they need to write the data, working with a validator network to then get the data onto the next, blockchain and that next node. And so like, most people think of these things as like blockchains, but they're kind of like node chains in a way, or like they're stored on these nodes everywhere. And so Ankr sets up this global node network that allows this whole thing to work faster for not just one chain, but we do it for across 50 different blockchains. So we've become kind of like the de facto infrastructure service for a lot of these blockchain companies, to where we win on speed tests, we win on price. And so they come to Ankr and we help them deploy their nodes around the world so that they have better DevOps and people integrate with their chain faster.
All right, so when you give that explanation of the different blockchains and the different coins, it sounds to me like when I go to Europe and I need to exchange dollars to euros, and then I go to London and I need to exchange euros to pounds, I go through exchanges to do that. Similar concept there?
No, not exactly. So you still go through an exchange, like a Uniswap, where there's a decentralized exchange, but that exchange is pulling its data from a blockchain somewhere nearby. And so whether the users in Europe or the users in Australia or the users in, America, it's having to access a node nearby it. And so if you have like 1 million users in Europe or in London, but you have like 10 users in Australia, you need a load balancer to make sure that they're like getting the best delivery system so that they're accessing it as fast as possible. So we offer the best load balancers in the industry that sit above our what's called an RPC, or remote procedure call.
Okay.
And so RPC is kind of like an API in Web3. If you're familiar with like an API term, right? So anytime someone's accessing this like simple version of the blockchain, they're doing it through an RPC. And so we run this like really amazing load balancer where no matter where people are in the world, let's make sure they're getting the closest node to them for accessing as fast as possible. And then they're accessing it through an RPC endpoint, which is in turn like how these dApps and these developers are integrating with the blockchain.
Okay. And then the developers, are they artists? Are they DAOs? Like who comes to you? Who's your customer?
We have 2 core customers. The largest customers we have are the blockchains themselves. So like Polygon, Binance, Avalanche, Phantom. I think something around like 17 of the top 20 proof of stake blockchains use Ankr. And so if your users don't know, there's 2 types of blockchains. There's proof of work blockchains, which are Bitcoin, which means mining. And there's proof of stake blockchains, which are basically a green way to run a blockchain that's fast and a little bit different than proof of work, where it's all set up with a network of nodes and validators, kind of doing this proof of stake. It's called proof of stake blockchains, POS. And so coins are staked onto the validator. And then when transactions need to get written, they go through the validator, and the validator gives the right transaction, then the transaction goes through, and there's a consensus mechanism for saying that all these validators are working together in the right way. And if there's a malicious validator, then all the coins staked to that proof of stake network get taken away, and people lose their money, but it happens extremely rarely. Most things are good actors. And so most blockchains made nowadays run on this proof of stake architecture because it's green, there's no mining energy used, and it's faster. And so most things have moved this way. And in that move, not only from Ethereum, but all these different blockchains that have been created, and there's like 100 blockchains now. Ankr is kind of like the proof of stake leader in building this infrastructure and helping companies build this infrastructure for blockchains. So we're this middleware layer between these blockchain companies and end users that they don't really see. It's kind of behind the hood.
That's right. And on a past episode of the show, we've talked about proof of work, which is mining, which is extremely energy expensive, and proof of stake, which is like, I trust in this coin, so I have a lot of it in my wallet. Greg trusts the coin, so he would have a lot of it as well. So you'll see a lot of these new programs going to more energy efficient proof of stake versus proof of work. And proof of work that's when the Bitcoin was first created. Your computer had to process a big mathematical calculation. And now that number, that string of digits, is so long, you need special purpose-built computers called ASICs to do that. So it's good to see you guys at Ankr are looking at the future of the blockchain, which is the holders have the trust and the value, which is kind of like how the gold standard, even though we're off of it now since, 1971, gold standard was proof that the US dollar was backed by something, right?
Yep. And I think Bitcoin might be the new gold standard, some would say.
In spite of it being the old proof of work. So it'll be interesting to see if, Bitcoin already had one fork back in 2012 was it? So they're, if they do another fork, like the ETH token is going through a proof of stake fork. It keeps getting delayed though, right?
Yeah, there's a good chance that it won't happen. So Ethereum is still proof of work, the core chain. And so whenever someone interacts with Ethereum, whenever they do buy an NFT or do some kind of transaction on DeFi outside of a major exchange, and maybe we can talk about like what MetaMask is and how this all works with people if they probably don't know. But like you have to pay a large transaction fee because it's still proof of work, and proof of work has large transaction fees. But it's working on moving to a proof of stake network on Ethereum. So they've been working on this for 2-3 years. Some people say it might never happen, the full transition. It's supposed to happen this year. It's been supposed to happen I think 3 times already this year.
Yep.
But there's so much data, so much historical data on the Ethereum network. I mean, it's the largest network of data there is in crypto by a long shot, right? And so there's all this data, and when they move that network over into a completely different infrastructure, there's all this trouble with being able to have the new infrastructure read it and store it and like interact with it all. And so like some people say it might never happen. You might end up with 2 Ethereum chains, an Ethereum proof of work chain, and Ethereum proof of stake chain. And then because of that, you've had all these other blockchains just spin up like Avalanche, Phantom, Harmony, Solana, whatever it is, because they're like, maybe Ethereum doesn't do it. And some of these things will just clone the Ethereum chain, like Harmony. A bunch of these things are just clones. Binance's original chain, which is now BSC chain, which is a clone, a fork of Ethereum chain, being like, hey, we're just going to make a new one because they're not going to figure this thing out. And they just made theirs proof of stake. And so a lot of these people did it earlier, but they didn't have to take all the historical data. So they were able to just spin up a new chain and make it go, which is great.
Well, as if it wasn't as confusing enough, it's going to continue to be. So, Greg, tell our listeners and viewers here how we can find out more about Ankr and if they track you and your antics in the space.
Sure. So you can go to Ankr.com.
How do you spell that?
Have a Discord, Ankr.com. The Ankr token is listed on Coinbase and Binance, so it's fairly easy to find, as well as like every major source. Ankr is on Instagram and Twitter at ANKR, and I'm on Instagram as CryptoGOPS, and on Twitter as 0xMEWN, so 0xMoon. And I think if your listeners are curious, I think there's some really interesting stuff happening with Ankr and the future of infrastructure. If any of this stuff infrastructure is one of those things that doesn't sound so sexy, but every single blockchain company uses it. So we're big believers here at Ankr that like the future of Web3 and all these things getting built will run and touch Ankr like across all transactions we do, but 2 trillion transactions or relays a year right now. We see that number continuing to grow up like exponentially. And so it's a young space now, but every blockchain uses infrastructure, and we're hoping they all use Ankr. So we love people in our community. We love people to come learn more.
All right, very good. Greg, good catching up with you at the Healdsburg Ranch last weekend. And thanks for being a guest on the show. We'll see you next time.
Thanks, Dave.
All right, it looks like the world's richest man is not happy with Tesla execs working from home. Elon Musk reportedly sent an email to staff saying they had to work at least 40 hours in the office or risk being fired. He's criticized other remote policies before, despite several companies allowing their employees to stay home longer or even forever. Well, Twitter employees, you know what's coming, okay? Y'all know if he buys Twitter, you're going to have to get your little butt back into the office before the new boss takes over, if he takes over.
And the irony is he was going to turn Twitter into a homeless shelter.
Like, what, dude? Meanwhile, lots of other companies have modified plans for workers to return to the office, including Apple, whose original plan was for workers to return to campus 3 times a week starting late May. However, with the new surge in virus cases and concerned workers, that's changed, and Apple's pushed those plans back. And now they're going to bring some workers back twice a week. So the company's giving those who feel uncomfortable the option to work remotely. You know what I would do? I'd be like, you know what? I call my boss. Hey, you know what? I'm just feeling so uncomfortable. I don't think I'm going to be able to come in this week. I would do that like forever. So one of Apple's leading artificial intelligence engineers, Ian Goodfellow, he resigned over this. He resigned in May following that announcement that, the original return plan. But co-working is back in some sense. Some workers actually want to get back into the office. If you got kids like mine, you probably like, where are my clothes? While others want hybrid flexibility. So this got me to thinking about companies like WeWork and brick and mortar companies as a whole. Now, we live in the Dallas-Fort Worth Metroplex, right? Which is just different. We're just different here, okay? Even a deadly pandemic will not stop us from going out to eat and shopping. So, Greg, I got to ask you, what are some stocks that are going to benefit from people going back into the office, even in a hybrid sense, and which ones will be hurt by this semi-return to work? Right off the bat, I think about companies like Zoom, Vimeo, Peloton, DoorDash. Although now when I think of DoorDash and Uber Eats, I think of it the way we used to look at pizzas and Chinese food delivery. Remember when the only thing you could get delivered was pizza and Chinese food? I'll never stop using food delivery services. Meanwhile, I stopped using my Peloton during the height of the pandemic, but that's another story. So talk to me, Greg. Where should I put my money? No pressure, but where? Right now, I want to know.
Well, and those companies you're talking about, like Zoom, I don't think companies are going to get rid of stuff like that because I think they learned their lesson that they can't, they can't another COVID comes around and they're not
Sure.
prepared, it's over, right?
Yeah.
The same way with schools are always, although they're back, they have those little days where they practice at home, they might send them home and they have like, oh, this Friday is going to be a virtual day, for practice. Some states do that. I don't know.
That's cool. That's a really cool idea.
We do that in Louisiana. But, so I don't really know if that's really going to go out and they're going to go that. And then Elon Musk, I know he's getting the bad rap for telling people to go back to work.
But he's also running factories like Tesla. You have to show up to make the damn car.
Well, see, that was the thing. He did say like the people that are making the cars are coming to work while you're not.
The execs.
He did say that, right?
Execs who are making tons of money.
He wasn't hitting the lower pay group.
Yeah.
He was hitting the tops.
He was on the execs.
And there's been studies done on this, and this is a very biased study, right? When someone does this study, and I've read plenty of them. I know right away what they want to happen.
That's right.
I can read their thesis right in the same paragraph. I'm like, man, I don't even know why you have a thesis. Your opinion piece already wrote it up.
It's like the news these days.
Yeah, so there are things that are very good remote work, like call centers and things like that. Right? You don't have to have the call center. You don't have to have all the hardware, the networking, and all that. Right? You just need one guy with a computer that can do VoIP.
That's
Although
right.
I was on the phone with someone in a call center in the background, I heard the bird screeching, the kids yelling.
Yeah.
And I'm like, all right, that's pushing it a little hard.
But they're supposed to be in a quiet room, but it is what it is on that. So those right there, that's one study compared that and said, hey, look, remote workers perform better if they're at home. It was a call center. Like, does that compare to, engineers and execs? So, and then there's other studies that you can see are clearly biased the other way. So when I look at it and what do I want to do, and I'll use you're in tech. So if everybody is remote, that's one thing. But now you're talking about engineering where you're bouncing ideas off of each other, especially if it's hands-on. How useful is that for the individuals to be right there talking to each other rather than sending emails back and forth or something like that?
But why can't you do Zoom? Why can't you do Vimeo?
Well, that's one thing. I mean, where's that personal cultural mix? So everybody talks about, more culture diversity in the company is great and it helps the company grow. Studies say that's true. But now we don't have any of that cultural mix. All we're doing now is working from our home. We're not mixing. We're not doing any of that.
Says the guy who's retired.
Hey, well, I'm under 40 and retired, so I know what I'm talking about, right? So, it is, so you kind of get that. Now, there are some great things about remote work that I can see will help other people.
Yeah.
Women. So women used to, for
Listen,
giving childbirth
let me
and
tell
taking
you something.
care.
I had to go back to work 6 weeks after having my kid. And if I could have done, like now I do radio, I do a syndicated morning show from my house, from the office in my house. If I had that capability 20 years ago, I would have seen my child, walk for the first time. You know what I mean? There's so many other.
So I think that will help, especially in corporation, in the higher levels. These women, if they have that ability, it's already built in. They practice it. So when that woman does need that time off, or the male needs a time off to help raise the kid in the beginning, they can do that and it's remote. It's there. But I look at it in one way on Elon's side. Elon has disrupted every major thing that no one's been getting into a century. But some idiot that's flipping burgers at McDonald's is going to repost to his tweet and say, oh, you just don't know how to run the business. No, dude, you're flipping burgers, dipping fries. That guy's disrupted banks, tech industry, cars,
Twitter,
space,
everything,
broadband connectivity from space.
Yeah, and space and government. Somehow you know how to run a company better than this guy does? Yeah, you don't. Like you probably have less brain cells than his fingernails that he chewed off and spit on.
Wow, no offense to people flipping burgers because I eat burgers as long as they're vegetarian.
I'm not making fun of people flipping burgers,
I know.
but you get what I'm saying. Like
Twitter is the great levelizer.
Yeah,
what he
I don't
means
care
anyone can communicate with the richest man on the planet.
And I don't care if you're educated or not educated. It's experience. And when it comes to getting things done, he's a hard worker. We know he'll sleep on the floor. He'll do all that.
He said that.
That's him. That's what he wants people to be like him. And that in a manager, when I teach business and things, that's kind of hard to push to the side. Not everybody's you.
Yeah,
you got to understand
that's right.
employees aren't going to work as hard as you will.
And they're never compensated as much, nor
Exactly.
should they.
Yeah. So I don't think he really grasped that. And I think that's kind of in... I'm not going to say he's on the spectrum, but socially he is on
the spectrum.
He's
says
admitted it on Saturday Live. He admitted it.
I just don't like to say that about people, but I don't think he gets it socially. He doesn't understand that to a point. I think he knows it, but then Twitter's right there. It's
But
a
then
few
there
keys
are
away, and someone wasn't going, you know, on that executive board that's supposed to be looking at these tweets was
Right.
like, dude, don't write this.
Yeah, but
you know?
who's going to tell Elon that? And he doesn't
Yeah,
care.
yeah, so-
but there are some people who like my husband is up in the middle of the night, but it's because it's his company. I'm like, dude, go to bed. And some people are that way. You want to work 24/7 when it's your company. But I just think, and Elon said, listen, if you're working 100 hours a week, you're gonna get more than the person working 40 hours a week.
I mean, we always talk about, I mean, this is the old saying, you know, like starting your own business is basically working 500 hours to make minimum wage or whatever. It is what it is, right? That's
But I will tell you something about this remote work. You are going to get me to work more if I can I'm going to be at work from Hawaii because I can vacation with my family and still do it from my computer. Yeah. You know what I mean? So you're going to get more out of me, and I'm going to be at work more because I can do it remotely. Yeah, and that's just me being.
Let's go back to the movie The Office, right?
He's
like, you might actually get 15 good work minutes out of me. The rest of the time, I'm just pretending.
So honest.
So if you're actually there and you're actually performing and you're actually doing things, it's a difference.
Yeah.
So I think since early 2000s, we've seen a real move away from cubicles into more of an open office
floor plan.
Right?
Remember our cubicles when we were? Oh, never mind.
Yeah. So with the new open floor plan where everybody's
jerk.
mixing, there's not so much of a super hierarchy level of executive. It's kind of more horizontal where everybody kind of has a say. There's still bosses, but you know we're not so really strict hierarchy. I think in that point, being there together at least some time helps that
I agree.
grow,
A couple
mix
times
that
a week.
culture,
I agree.
The at least spread it a little bit. Now, I don't believe any of the studies because, you know, I've been involved in plenty of them, and I know how biased they can go from one side or the next. You know, it just is what it is. But I'm not going to argue. It's his company.
Yeah.
You know, he's in charge of it.
Yeah.
So
go to work.
And then which ones to buy? None of them. I don't think the market's going to do good.
Oh, okay.
Interesting.
How do you really feel?
All right. Well, hey, thanks for that biased answer, Greg Krause, the lead instructor at OptionsPlayers.com.
Yes. Remember, if you've got questions, we can try to help answer you. This is really cool. If you guys are, by the way, behind us, if you are listening to the podcast, you got to watch this on YouTube. This is Apple's office. I mean,
campus. It's the Flying Saucer campus.
Look how flipping cool this is. It's like this is their campus. That nobody's there. But can you imagine if that was your office and you had that? So there's no bad view.
There's great YouTube videos from guys that live in Cupertino near where this was built of them flying over during the construction, showing all phases of like the seamless glass walls going in.
So
and
cool.
when you walk through it, Steve Jobs said he wanted no thresholds on the doors to slow people down. And this was arguably Johnny Ive, who's the designer of the iPhone and the iMac, was his last work that he did before he left Apple. So very cool.
Super cool. So listen, if you got questions, we're going to try to help you answer them. We want to hear from you. Email us at www.optionsplayers.com. Hit us up on social media at What's Next Wall Street.
You can, of course, watch episodes and see the Apple campus at the YouTube channel for OptionsPlayers.com.
Yes.
Or you're probably listening to us on Spotify, Apple. You know, hit the subscribe, alert button, share it with a friend, and you're going to get to spread the gift of knowledge. From me, Dave Mathews.
Yes, I thought you were going to say spread the good word, like the Bible. No, I mean,
praise technology.
Yes. I'm Georgia Alfredas. We will see you next time on What's Next Wall Street.
You are healed.